Okay, we'll go ahead and get started then. Little a little bit of homework. I don't know how I got confused, but Courtney straightened it out for me, but I'd already got it straightened out before then. I don't know how I got my dates so mixed up, but I didn't have you originally finishing up till the week after the 11th, since you took off spring break, but actually I have to post grades on the October the 8th. So which means we will meet like this next week. Then the following week, which is what we had originally said we would do, but we'll meet tonight, and we'll meet next Monday like this, and then on the 4th, we will meet. That will be your last class, and we will come over to Jeff City that night, and you will do your projects, and that way I'll have everything finished. I put the second exam on there. It's due Sunday, and I'm going to go ahead Wednesday and put the last exam on there and make it due September the 30th. And that way you can be free for your project. So that will give you, 2 weeks to do those 2 exams. As you know, most of you have already completed the homework and everything. So, I expect some pretty good projects over there that night. So does everybody understand that what we're doing now? We finish up on October the 4th. And that's when you will have to make your presentation. So you've got all this week and next week to get them ready. Any questions on that? Okay, let's go over budgeting. And what is a budget? Somebody up there tell me, just yell it out. Somebody there tell me what a budget is.
There's an amount of money that you have designated for something.
Yeah, it's an estimate of revenue and expenses over a specified time. So you can have a monthly budget, you can have an weekly budget if you want it, a monthly budget, but most budgets are either semi-annual or annual. So lots of big companies come up with the annual budget because that's when they have to do their reporting. And a budget, remember when we talked about accounting, we talked about we would look in the past. Well, a budget, we're looking in the future for a plan. And you remember, so one of the things I told you that we would do with budgeting is planning. And we plan to ensure that there's enough money to do what we need to do. So there's several different kinds of budgets, and we're going to be going over those budgets and the differences tonight, but I'm going to break you up in just a couple minutes after I talk about the first one. The first type of budget that we're going to look at tonight is a master budget. And it's just an aggregate of all of the lower level budgets. A master budget can be used to determine the payback period for an investment, or it can evaluate the acceptability of a project. It can evaluate the acceptability of an investment project. Can evaluate the investments. Can rank the investment projects. use this to compute your rate of return for your investment. So that master budget just sort of puts all this together. And then to put it together, you have several different budgets, such as your operating budget, your cash budget, your financial budget. You know, you can have revenue budgets, you can have fixed cost budget, but all of those are to help you make a plan. So what I want you to do with this capital budgeting is divide into your groups, and you don't have to take the same company that you took last time. I want you to pick a different company. It could be a small company, but I want you to be able to Google it. And I want you to, you may have to do it 2 or 3 times to get the information you want, but I want you to look up a company and look up their budget. And I want you to be able to pull out what you think are the most important aspects of that capital budget. And you may want to you might want to Google, say you were doing JetBlue Airlines, you can do JetBlue Airlines capital budget, or Apple Computer, you can do Apple Computer capital budget. But I want you, after hearing just briefly what a capital budget is, I want you to pull out what you think as a group the most important aspect of the budget, and think of things like, what are they spending their money on? What are they bringing in their money from? How much are they spending on marketing? How much are they spending on selling? How much are they spending just on general? How much are they spending? That's what I want you to pull out of there. So I want you to analyze a good sized company's budget and make sure that you concentrate on that. And then somebody from each group come up like we did last week and make a little presentation, but I want somebody different to talk this time. So I'll give you about half an hour, 40 minutes to look that up and come back and report. Everybody understand what they need to do? Okay. Look, concentrate on budgets. Okay, y'all about finished up, or do you need a couple more minutes? If you're pretty finished, raise your hands. Okay. Okay, let's hear from group 1, and let's hear from somebody different this week. How about Joseph Boyd? No. Front and center. There you go.
Can you hear me? Good.
Yes, great.
Cool. Operating expense. Operating expense. We're doing Apple. Total expenses has increased from 170 billion in 2016 to 205 billion in 2019. For 2020, they expect a total expense to stand at 218 billion, with operating expense 208 billion, non-operating expense will be minus 1.9 billion and income tax of 12.2 billion. Operating expense would increase from 156 billion in 2016 to 196 billion in 2019, driven by a 30 billion increase in cost of sales. Yeah, and they should continue to develop that in the future. Pretty much all we got.
So, in looking at their budget, what do you think would be the biggest threat to Apple?
Probably our operating expenses, because it's very high and it's continued to go up over the years. I know income is pretty low in comparison.
And how do you think they could control those expenses? You have any ideas on that?
I mean, probably just look at where they're spending their money and what they can maybe say need all that. I know, maybe cut employees or something along those lines. Yeah, just cut costs that aren't maybe needed.
Yeah, we'll get into that just a hair more. I just want to get your ideas so I'd see how much to go deeper into these lower level budgets, but that's a good job on that one.
Thank you.
Okay, group 2, how about Eric?
Can you hear me?
Yes, sir. Good job. I can hear you.
We did it a bit different because we didn't look up the numbers. We interpreted the question a bit differently. So we have that analysis looks into different potential investments. They project the investment cash flows and compare the projected earnings with inflation rates and the time value of investments. So the rate of return is obviously important for them, so they can see if an investment pays off or not. They also look at where they have the cheapest labor costs, for example, and where the revenue is the biggest. That's why they mainly focus on Asia and are also big in Europe. And the marketing expenditure is one of the largest operating expenses, and at the same time, one of the most important mechanisms for driving brand desirability and top line growth, sustainability. That's what we basically have. So as I said, we didn't look up the numbers, but I have them in front of me now.
So what do you think, Andy? Do you see anything that would be threatening to them? Maybe the Asian labor or something? What do you think may be the biggest threat to them?
I mean, in Asia, obviously, they're looking for quality. So, as I said, we didn't look up the numbers, so I can't tell you much about threats. But yeah, like I said, didn't look up the numbers. So.
Okay, all right. But you understand what we're doing on this is, looking at numbers, and then we're going to come back and discuss the importance of what you've done tonight. So group 3, how about John? Donald, it's going to be your turn down here.
Can you hear me, sir?
Yes, sir. Good job.
I have taken the company Nike. So are taken their 2020 third quarter. So they have a revenue of $10,104 a million, and their operating expenses were 2,413, and the selling and administrative expense were 3,283. So their operating expenses and their selling and administrative expenses have been reduced to 3 to 7%. And they have gained a net income of $847 million in the third quarter of 2020.
So did you see any, did your group see anything that in their expenses that could be threatening?
No, because they have reduced the expenses in the administration and in the operations. So it's a gain for them. So
Okay,
they're heading towards the profit.
okay. That's what it's all about. Okay, group 4, let's hear from Christina.
Hi.
Hello?
We picked Microsoft. Microsoft revenue in 2020 was $143 billion, with the operating income being $53 billion. And the revenues continued to grow for the last several years. And they achieved a record revenue in 2020 with $143 billion, which is an increase of 40% compared to last year. 40% of this increase came from Azure, and another 20% came from commercial customers. And then Microsoft's also focused on products and services for business customers. And their biggest threats are Apple, with their main system still being Microsoft. And the earnings per share are $5.76, which also increased over the last years. The increase from the earnings per share were 14% compared to last year. And the operating cash flow and the free cash flow also increased.
Very good. Do you think there could be any more threats to Microsoft besides Apple, or are they too big to be threatened?
I think Google could be another threat. But yeah, the operating revenue has been increasing over the last year, so I don't think that's going to be a big problem.
You know, they developed their system at the right time, at the beginning of personal computers, and honestly, I think their biggest threat, I don't think it will happen, but could be governmental regulations. And I don't know if you've studied strategic management yet, but when you study strategic management, you'll learn that one of the biggest threats to lots of business would be government regulations. And I think Microsoft, that could definitely, along with Facebook and Twitter, the federal government's going to be constantly batting them around, thinking about the monopolies that they have, and you look at the definition of a monopoly, they somewhat have that, and of course they have earned it. And one of the things Microsoft has done is I have a close personal friend that I used to work with about 40 years ago that went to work for Microsoft, that I've kept in touch with him, and they have, if anybody they thought was going to be competitive, they would just buy out their competitor and use maybe some of their patents or shut them down. So, you know, that's one thing. And of course, that's one thing that they had to study. And I'm sure they did in studying their account. You know, how do they afford to do that? How do you afford to go in and buy something and shut them down? And but it's happened, and we'll mention that just a little later on tonight. Things like that. So very good. Now we'll hear from the Knoxville group here. Yep.
Last year, the revenue was up significantly from the prior year, which is surprising with COVID. About $10.1 billion, which is a net growth of 42% over prior year's revenue. Their operating margin grew by 2% from year-over-year performance from the previous quarter. But one of the main things that we saw was their advertising budget, which accounts for about 40%, $4.1 billion a year, relative to $10.1 billion in sales. What that tells us is that that's their primary threat. It's just the competitors coming into their same space. And so yeah, 40%, nearly 40% of their budget is allocated to advertising. 46% of their budget then goes into materials, everything from bottles to sugar, shipping, and handling costs.
Interesting. Yeah. Be interesting to you know, evaluate what their competitors spend on that same amount. And I would, you know, I would bet that Pepsi's probably the only one that's up there in that type of spending, just because of the volume.
We also noticed that they have a line item for digital ecosystem expenses, which probably is, I don't know, but we couldn't figure it out. But between digital ecosystems and sustainable business practices, I don't think that's part of their marketing budget, but those were also significant items in their expense rates.
If you remember, we discussed when we started the, you know, the impact of you know, for a company's sustainability, the impact on what they do that is not numerical. Their sustainability of their environment and what they're, you know, so you know, it's hard to believe, but you know, companies like that can make mistakes and ruin the environment on small scale. And you know, I'm not sure large scale, but I experienced one with a bottling company that they had a fire in their warehouse. So they had to dispose of gallons upon gallons upon gallons of product. And they actually went to the town sewer system and dumped it in the sewer system. Some of it by the tanker load that was affected because it got too hot. They had some things, raw materials coming in. So they, you would think, you know, it's a sewer, you know, it's sewer. But the way a sewer system works is on bacteria and eating up the waste. So they overdosed on sugar. More or less got diabetes, I guess, and it shut everything down. And it cost them, for, you know, for the small town that I worked in, it costs them well over several six figures of money to pay, to get that straightened out. And the only fix is draining and you can't drain a sewer system all at one time and going back and putting good bacteria back in. So it was costly, but they stepped up and paid for it, because if they hadn't, and the word got around that they had ruined the little town's sewer system and wouldn't pay for it, then they would have been in some deep trouble. So companies have to watch, and that's why they do spend money, and they do have budgets for things like that. So I'm going to go over some terminology now before I have you do another little exercise. And we're going to talk about different types of budgets. I need to introduce you to different types of budget, because I think we said at the first of the course, someone, or the first of class tonight, someone said, that budget's a picture, and I said, yeah, it's a plan of your expenditures and your revenue coming in. But if you remember, there's another type of budget you can do, is a cash budget. And these are called lower level budgets, but they're so important. 12-month cash budget, lots of times you break it down on a month to month. And I think I told you this story in the little town I worked with, the, $7, $8, $9 million budget. Your money didn't come in all at one time. And so you had to budget of when your money was going to come in. And of course, that was, that's known as a cash budget, but very important. Another important term that we discussed early on about the first class is the control. In accounting, you use accounting for planning and controlling. We discussed that. So, controlling is the process of taking this information and getting a feedback for your plan. And I said I'd probably make this statement at least 2/3 of the class meetings. You can't manage what you can't measure. And so in saying that, we must have a way to measure so you can make decisions. Lots of times that controlling and cash flow go hand in hand, because you may want to make a decision and you do this differential analysis that we just talked about last week, and find out, you just can't afford to do what you really want to do. In your heart, what you need to do, but if you can't service the debt, you're just in trouble, if you can't measure it. We do a direct labor budget and a direct materials budget. And, they're pretty much self-explanatory, as if you're talking about Apple computer, that budget, that direct labor budget, is the labor that it takes to manufacture the computers. That's why that a lot of our companies, they go overseas to manufacture their products here in the United States. Many do. Then sometimes they start to come back because tariffs are raised and it's just as cheap to stay here, but then the tariffs go away. So, you got to understand that worldwide economy, is also very political. And I don't mean the Democrat, Republican political. I mean, it's just of a political nature that decisions are made. Lots of times based on the company and the company they're trying to help. But most of it, if you look through these things, it's monetary. you know, you have a miscellaneous purchase budget. In the town, we called it petty cash fund. Lots of places have a little budget for that. What, you know, something comes up and you got emergency and you need to fix something quickly, so you have to do that. Of course, some of the, and I wanted you to look at that, you know, some of the big budgetary items in these big companies is your selling and your marketing budget. Why do you think they spend so much of their budget in sales and marketing? What kind of a company would do that? And I'm going to tell you the answers, but the type of company mainly that would do that is the type of company that Don spoke about, Coca-Cola. Now you look at it this way, Coca-Cola has a tremendous marketing budget. Why? Because they have tremendous competition from Pepsi-Cola and then other drink options. So they've got to keep their name out there. But you don't see a company like Microsoft spending that much on marketing and sales because they're locked in to so many computer systems. They don't have to spend it on sales. They have to work their budgets and spend it on research and development because Microsoft does not have the direct competition that someone like Coca-Cola or another manufacturer would have. So thus they spend more on research and development. Coke probably doesn't. They spend some on research and development because they're probably trying to think of new things to come out with. But you know, Coke has had pretty terrible results on that. But these budgets are so important, as more so when the competition or the level of competition. So you see, that's when you're making decisions and using accounting. Why would Microsoft say we're going to spend $20 billion on marketing when they wouldn't gain additional dollars? It just wouldn't happen. But Coke, on the other hand, spends money on marketing because if they don't, they know their competition's right there. Some people can't tell the difference in the drinks, colas, and you know, they would lose market share. So it's all about keeping your market share, but it's all about doing something with your budget that enhances your company and making those decisions. Now, what I want you to do, so I don't have to talk anymore right now, I want you to go just a little bit different twist. And this won't take as long, maybe 10 minutes. I want you to now look up another company, but I want you to look strictly for their balance sheet. Now, in making it a budget, lots of times companies, that's the first thing they start with, is their balance sheet. We haven't talked a lot about balance sheets, but I would like for you to look up a company and specifically find their balance sheet. Now, I hope everybody knows, you know, balance sheet consists of assets, liabilities, and equity. So, you know, you have $100 worth of assets and $50 worth of liabilities, then you got $50 worth of equity. That's your money, and that's something you can use for you know, to improve your company. But I want each group to look up a company And I want you to then report on what some of their assets are. First of all, I want to know how much total assets they have. I want to know how much total liability they have. And I want to know how much equity they have. Then I want you to analyze it just a little bit deeper. I want you to name some of their assets, but then I want you to look at what you think is their most important asset. Then when you go on the liability side, I want you to list some of their liabilities, but I want you to think and discuss what is their most pressing liability. What is a liability you think they need to get rid of? Because somebody in their corporation is trying to make that decision now. Then I want you to look and see how much equity they've got in that company and see if they're really in good shape or not. So let's take about 10, 15 minutes to do that, and then we'll come back and report again. And when you're looking at this, keep in mind, just a little refresher of what a balance sheet is. A balance sheet is a picture of what your corporation is worth on any given time. That changes. It could change by the minute, but you have to have something to measure. So normally you do a balance sheet. Some do it monthly. Again, you know, you normally do a balance sheet more than once a year. But so the balance sheet's just a picture of your corporation of where you stand at any given moment. But the reason it can change is once you produce that balance sheet, if you get if you buy a vehicle, there's another asset. But if you didn't pay for it, there's another liability. So it changes rapidly. Okay, let's get back to order. Everybody looks like they're probably finished. We'll start with group 4 this time. And don't think we've heard from Lucas any.
Can you hear me?
Yes, and let me ask you a question now. You guys are still drilling your project on a broom, correct?
Correct.
Okay, very good.
All right, so we just stuck with Microsoft here and looked at their balance sheet, and their total assets are 333 billion, and that's a total asset growth of 10% compared to the year before, to 2020. Probably their biggest asset, obviously, are their computer software and equipment with 51.25 billion. On the other hand, their total liabilities are at 191.79 billion right now. And their total equity is at 141.99 billion. So the liabilities and shareholders' equity is 333.78 billion. Yeah, that's the main parts basically.
So wouldn't you say Microsoft's in pretty good shape looking at their balance sheet?
Well, they look like they're in pretty good shape, yeah.
Yep. While you're up there, do you have any questions about your project or anything?
No, not so far.
Okay, if you do, just send me a text or something. Don't wait till the last minute.
Good.
Okay, let's hear from Aaron, group 3. And Aaron, you guys are still doing antibacterial soap?
Hand sanitizer, yeah.
Yep, okay.
Yes.
Okay, go.
Okay, so we looked at the balance sheet for Nike. and it looked like their assets were pretty good. Their largest asset was their cash, which was over $13 million. And then their liabilities looked like their biggest liability was their accounts payable, which is their most important liability, and their equity was pretty good. They had a strong stockholder equity, about like 12 million. And it looked like they were in a pretty good situation.
Okay. Very good. Group 2, let's hear from Quentin.
He's sick.
Oh, he's sick. Okay. Who wants to double up and do it?
Yannick is coming. I'm coming.
And you guys are doing cotton dishcloths still?
Exactly.
Okay.
Yeah, we had the company Starbucks. The total asset was like 29 and 374 billion. The biggest asset is cash from Starbucks, and yeah, it can be used immediately to perform economic actions like buying, selling, or paying debt. And the biggest liability, or the total liability, is 37, 173, and 900 billion. The long-term debt is 22.5 billion. It's like significantly more than the 11.1 billion the year before. And yeah, the higher your debt balances are, the more you commit to paying on them each month. And yeah, the shareholder equity is minus 70.7 billion. The debt to equity ratio for the quarter that ended in June was minus 3.46. And yeah, so the equity is negative. And yeah, so we think Starbucks is choosing higher returns today at the cost of safety tomorrow. And the increased liabilities have been the driving force behind the company going into negative shareholder equity, which is not sustainable in the long term.
You're absolutely correct. And what did you say what contributed to that big jump in that long-term debt you spoke of?
Yeah, I spoke about it.
What contributed to that? What caused that?
I think there was with the liabilities. Actually. I'm not sure.
No, you know, I would almost guess a lot of that liability is opening up new shops. You know, they're still opening. They've closed some, but they're still opening up new shops. And of course, I just wonder, that would be another thing to study, but how much of a hit they took during COVID when they had to close their doors and people couldn't go in there and sit. But then I've often wondered, you know, somebody goes in there and sits, they can only afford one cup of coffee and they sit there on a computer 2 or 3 hours. So maybe they don't care about that, you know. So, but you have any questions about your project?
Well, I think we are good.
Okay. If you do, just let me know.
Right.
So group 1, let's hear from Tim.
Hello, sir. Can you hear me?
Yes, sir.
Perfect.
And you're doing a living room chair still?
That's true. Yeah.
Okay, very good.
So our company is Audi, so the car manufacturing company, and we looked at their balance sheet, and the total assets like around 51 million. The total liability is around 74 million, so that looks positive for them. Total equity is around 40 million, looking at their total liabilities, one can see that like the long-term debt is very high. And one of the biggest things concerning liabilities. And that may be also because of COVID, because they may have many cars in stock that they didn't sell because people didn't come to buy. So as a solution for that, they could maybe like outsource production to reduce their costs on that, but they could lower their long-term debt.
Okay, there's you know, a lot of automobile industries really, you know, they're making big changes and you know, in some trouble. Could you pick up anything from their balance sheet of maybe something that's maybe could go wrong or something they needed in assets wise, more assets that could you just pick up on anything about the automobile industry?
What do you mean exactly?
Well, you know, you're looking at a balance sheet, and that's a picture of their company. Do they have a good picture or a bad picture? I guess let me put it that way.
I would say it looks good at the first view, but I guess the car industry itself has a lot of problems, and they're in a big change. But at least concerning the balance sheet, doesn't look like that. But I think the long-term effects of especially COVID may harm the balance sheet in the next time.
You're absolutely correct. You know, right now I think they're just feeling the effects of it. I know lots of dealerships, if you drive by them, they don't have, some of them don't have 10% of the cars they had 2 or 3 years ago. They just cannot get the cars. Then we're the big push for the electric cars. So, you know, just think about when we're thinking about accounting of what these types of industries are going through. And next week, we're going to look a little more at the automobile industry and accounting and how they do that. But that's what we're going to finish up with next week. So you have any questions? I may have asked you, do you have any questions about your project?
No, so far we're good.
Very good.
Thanks.
And keep in mind, we will be at main campus 2 weeks from tonight. That's when you'll have to present your projects. And I'll go over it again next week to make sure you've got everything you need. So now I want to talk a little bit about capital budgeting. And this capital budgeting is it's a very short chapter, but it's a very important chapter. And at another institution now, I'm teaching finance and capital budget. I don't know if you've had finance in your MBA yet or not, but you'll get into a couple of these things that I'm going to mention tonight. If you've already had finance, you guys had finance, you'll have had this, and if you haven't had it, it's coming. So some important terms, you know, capital budgeting is one little aspect, or not a little aspect, but it's an aspect of master budgeting, but it's almost completely to the side itself. And capital budgeting is the process of planning significant investments in the projects that have long-term implications, such as the purchase of new equipment. So let's say this automobile industry you're talking about, and they needed some new type machinery to produce their automobiles. You know, they would have to look at it. And a prime example of what we're trying to get across in this is right here in Tennessee. And that's why we're going to study the automobile industry, because it's important in Tennessee. But Volkswagen in Chattanooga, they could have the money probably to do all of their own manufacturing. But they chose to locate in Chattanooga because in the surrounding area that they're able to truck parts in there. For example, over at Clinton, you know, they make the door panels, the support systems for the doors and things like that. And they're able to, Volkswagen's able to have them manufacture them for them rather than do it themselves. And, you know, a couple of years ago, Volkswagen really needed them to step up in production about 5 years ago. And they bought a piece of equipment that it was actually too big to transport by truck. So they transported it, and it became quite a spectacle on a big barge up the Clinch River and unloaded it there in Clinton. And it turned out to be a big thing. But see, that's a decision somebody had to make. Do we manufacture our own, or do we, you know, get these parts? So we're going to talk more about that in variances next week, and especially with the automobile industry. Cost of capital, that's the cost that a company must, it's the rate of return that a company must pay for their long-term investments, because there's you make this investment and you put this $5 million worth of equipment in there, and it's going to last you 20 years, but you may have 7 years to pay for it. So, you know, that there is a cost to that. You not only have to make money, but there's interest. We also, an important concept that you'll see on the exam is the internal rate of return. And that's the discount rate of which the net present value of an investment's goes to zero. And the rate of return is how much you make, sort of like the break-even point. And it's tied to like the net present value, which is the difference between the present value of an investment's cash and the present value of its outflows and inflows. So when we talk about the in finance, the present value of cash, it's what, you know, you've got $100 in your hand today and it's worth $100. But you spend that on a piece of equipment that depreciates, and you don't have the $100. But what if you got someone to manufacture instead of you buying that equipment, and you kept that $100 and invested it? Then, you know, that's the difference. And we call that the time value of money. And that concept, you know, today stands around $100 is worth more today than it will be a year from now. So you have to weigh all those things together. Also, working capital is very important. That's your current assets. And I should have asked you when you were doing that to break down the current from the long-term assets, but that's pretty elementary accounting. But your working capital is your long-term assets minus your long-term liabilities. And the difference of that is how much working capital you should have. Now, you must understand the difference in long-term and short-term. You know, your long-term or your equipment, your building, things like that. But that's your working capital. But your short-term liabilities are what you pay every month. if you got rent, if you got, you know, insurance that comes out every month and all that type of stuff. So that's really, that was that they go over that very shortly because it's just a little taste of how money works, and you'll get into that much deeper in figuring all of that into when you're in finance. But it's like I said at the beginning, all these classes, they correlate, and they all work together, but all of it just about funnels into accounting, or you have to pull accounting information out to be able to make decisions. But to be able to look at the figures in accounting, you have to know all these other terms that we're talking about. So, we've covered those chapters, and I'm at some time in when I've taught these courses, I have been very, very concerned about the students being behind in their work and pushing them to catch up. And I can say that that's not the case with the group sitting there in Jefferson City, or the group sitting here in Knoxville, the two sitting here in Knoxville. I'm very proud of the work ethic, the work you've done. Everyone is on time or ahead on their homework, their cases. Again, I will have the final exam, which is just, it's on the last two chapters. I'll have it on there by Wednesday. You'll have till the next week to get it done. So you're just doing very good on the homework and everything. So if you don't have any questions, you're free to go, and I'll see you next week.